You're watching Famous Dave on YouTube.
So, good morning. We had a pretty big VIX and vol spike over the last couple of days. In fact, 2 sessions of down moves and in between an up move. So it was kind of a wild ride. However, these events are an opportunity in volatility and certain trading, certainly in trading UVXY, VXX. Now, people who know me know I usually trade to the short side, so thus the strategy would be to wait for one of these kind of spikes and then put on some sort of short delta strategy in UVXY or VXX. The question is, how do you know when volatility is going to subside, and how do you know when sort of the big one hits? We had a period a year or two ago where we had high volatility that lasted like 6 months, right? So the wise thing to do would be to sort of scale into a position if there's a potential of it lasting 6 months. However, we know that most volatility events last 24 hours or less. So usually what happens is you get a spike in the VIX and you can immediately put a short position on and it just kind of goes right back down right away. That's like sort of the normal course of events. Let's take a look at the VIX over the last couple sessions and see what we can see here. Let me get out of the way here. Behind me here is the VIX, and you can see the two big spiky days punctuated with the rally back in between them, and then subsequent rally back today. So we've seen spike, rally, spike, rally, and the VIX sort of doing the opposite of what the market does. With the market down, the VIX up, and vice versa. Usually we don't see such bounces back and forth. We might see the market sell off and then just kind of be unched, maybe. Actually, maybe that's not true. I guess we rally back often when we have a big down day. But this kind of seesaw of up, down isn't the norm. And it can be very difficult to establish a short volatility position when all craziness is going on. You look in the chats, everybody's saying, oh, it's the end of the world. Omicron is going to destroy the world economies. We're all shutting down. And it can be very hard to pull the trigger on this sort of thing. But that's usually the moment of opportunity when everybody is sort of in panic mode. That's the moment usually to put some sort of position on. Now, I got some emails concerning the strategy of selling naked options, selling naked calls. And there is, surprise, surprise, no, everybody doesn't agree on this strategy. And thus, people who are considered experts in the VIX have differing opinions on this. Now, I was trained as a market maker, and I was trained to take risk. I had a lot of money behind me when I was a younger man, working for a big trading firm. The trading firm I worked for would have been considered in the camp with like Citadel and the sort of evil empire that the meme stock guys talk about all the time. But we had enough money to absorb some big P&L swings. And I was encouraged to sell naked options with undefined risk. That means that the stock could, theoretically, a stock could go up to infinity, right? So if you sell a naked call, there's undefined risk. Now, with volatility products, it's especially dangerous to sell naked options because these products tend to crash upward instead of crash downward, right? Normal products in the equity trading world tend to crash downwards, right? When Enron went out of business, the stock went down to zero. When Bre-X Mines went out of business, the stock went down to zero. However, if the market starts to crash, the volatility is going to explode upwards, right? And we saw that during the beginning of the COVID crisis. We saw TVIX go to 1,000, right? We saw these products every day go up, up, up. And thus, I would wholeheartedly agree with when people are saying don't sell naked calls in these products. I would say, for the first 5 years of you trading VIX products, I would not consider this at all, and that will keep you safe, right? We want to keep safe. And for me, who has a long-term experience in these products, it's very rare that I would sell a naked call. I might sell one naked call with a large account value, knowing that, even if UVXY went to 1,000 today, it wouldn't blow out my account. Now, there are some people that regularly sell naked calls, and it's just a risk that they're willing to manage and live with. If you're watching your position all the time, yes, you can get a big move overnight, but eventually the market's going to open, and you would have an ability then to either cover the call or take some sort of evasive action, whether that be buying part of the underlying, buying some other option against it, maybe a farther out of the money call, this sort of thing. And the bottom line with selling or putting a short position on in the VIX is you have to make some sort of assessment of the market conditions. For example, the current market conditions. It's very hard to tell why the market is making a move at the moment it's making a move. The more days that go by after that, the more certain you can be of kind of figuring out what, quote unquote, what happened. And it appears at this point that it was the news of the new variant, the Omicron variant of the COVID, that made the market spike. And so you kind of have to make an assessment of that news and say, well, is that going to mean that we have permanently higher volatility? Is that going to be like a 1 or 2 day event? Or as more information comes out, or is there going to be clarity, and is stuff going to kind of come back down? You can see just from the chart behind me that we didn't take out the highs of the initial panic on this the second time we spiked. So that kind of tends to tell you that that maybe this will fade, right? And thus, it's an opportunity to short this stuff. What we find out a lot is that people already have a short position on in the VIX when one of these events occurs, and that's when we start to get all the emails. What should I do? I've been employing the strategy of shorting UVXY and VXX. It's been working for months, and now it just blew up in my face with a vol spike. And to this, you have to say that's the price of being able to make money in these products, is that they do spike on a regular basis, right? It is not an outlier that you get a spike in the VIX. It does happen. So it's kind of the price of admission to make money in these VIX products. And this is the reason why when we employ option strategies to short these products, we tend to use expirations that are a little farther out in time, because then the idea is, if we do get a spike, we have time for it to subside and for these products to go back down before our options expire, right? Because if you are trading a front week option and it spikes, there's not a whole lot you can do. Sure, you can roll it out to the next week, which is what I would definitely consider doing. But it is generally an easier thing to have stuff a little bit farther out in time, maybe a month out, 2 months out, 3 months out, as far as these products go, for peace of mind for these kind of spiky things. Now, we've talked about the bullseye strategy of selling at the money calls every week. And in that case, you're going to want to roll your calls to the next week. And I would say that use the same strike as you did before. And yeah, you face some pain, but we know that these products at some point are going to go back down and make new lows because mathematically they just do due to contango. Let's take a quick look at the VIX Central chart here and see what we're looking like today. You know, the bright thing for me right now is that the meme stocks have been consecutively going down for a while, so that's good news. Let's see what we got here. That's good news for me in as far as these. As far as the old P&L is concerned, all right, so let me get out of the way here and we can take a look at VIX Central, and we can see that really the term structure is not looking bad, right? We are sloping upward. We're still showing 5% contango. So yes, we're off the highs in the VIX, but the term structure is not showing that. It looks relatively normal, relatively healthy, and that tells me that the market is not considering the last spike of the last couple of days as something that's going to continue at this point. Now, volatility is higher than it was, but if this was a real kind of panic event, we would see a smiley face here with the front months sloping upward. The fact that we are back in contango, to me, says that the market is kind of shaking this off as a 1 or 2 day event. Certainly, it's been painful for those who have come in short in VXX, UVXY. If we look at UVXY here, we were hanging out below 15, 14 here, and now all of a sudden we're at 18, which isn't fun if you were short around 15. But the market is a vehicle, as Warren Buffett says, the market is a vehicle that transfers wealth from the impatient to the patient. So it requires a little patience here for stuff to kind of come back into line. Same thing with VXX. You can see I've got all these little charting hash marks on my charts right now, but you can see VXX was hanging out around 20, now up around 23. And these were opportunities. It still seems to be an opportunity right now to short this. Now, the problem is, of course, if you already had a big position on before this pop happened, you may not have the bullets to short it now. And that's why you want to keep in your mind next time, keep some cash on the side so that you can have some bullets to add to a short position when you do get that inevitable spike. And we know that this happens on a regular basis. So it shouldn't be a surprise to you. If it was a surprise to you, then now you know this happens and we need to be ready for it. Just a brief turning to the meme stocks here for a second. AMC has had all of this news story hype, and despite all of that, it has continued to move lower. They had record sales on this, I believe it's Spider-Man movie, plus they have this thing where if you buy a ticket, you get an NFT, and they've hyped like crazy, but the stock has struggled to not sell off. Same with GME, and it seems like the two are just trending lower for the moment. How long that will last is anyone's guess. They could turn around today and go straight up for weeks, but for the moment, the two are trending lower. GameStop yesterday had a pretty impressive comeback from the lows. We got down to 188 yesterday, and it really kind of just rallied all the way back to almost 200. Now, 200, is it a psychological barrier? Was it support before and now it's resistance? If we look at the chart and we back it up, now 200 is a psychological number for just traders, just because it's a round number. But the only reason that 200 is a round number is because we have a number system based on tens on 10 because we have 10 fingers, right? So if humans had 12 fingers, then 200 wouldn't be an important number. But psychologically, it's an important number. But if you look at the charts here and you go back a little bit, 200 isn't a spot where stuff has stopped at or had a lot of bounce off or resistance to, right? You can see here it bounced off 195 once, but when you look back here, you don't see it either bouncing off or stop, or you don't see it as support or resistance is what I'm trying to say. So that could change, but it doesn't seem to be real significant, that number 200. We'll see what happens moving forward. Like I say, there's no way to tell what's going to happen moving forward. I am still short, and it certainly has helped the old account to go from 250 to 199 here. It remains to be seen what happens from here moving forward. All right, so there's the outlook, or just a little comment on what's been going on lately. Twitter people got kind of hammered here if they bought the news with Jack Dorsey getting out. You see it spiked here, and then it just came right back down right after that. Twitter announcing some news about privacy with pictures yesterday. I've started kind of following this vol-Q, the volatility of the NASDAQ, and looking at that a little more closely. And you might want to as well. So we'll see where we move from today. Markets look to be rallying back. The Dow futures up 300 currently, S&P futures up 56, and NASDAQ up 205. And this rally kind of started right after the close yesterday. And the VIX down 3 and kind of coming back into orbit. It was a huge opportunity if you happen to be long volatility products right before the spike, and if you happen to jump onto the short side, there was an opportunity. And I believe there's still some opportunity to the downside here to make some money over time, and B, maybe some quick money as the VIX kind of settles back down below 20. So that's kind of where we are right now. Thanks for checking in, and I will see you in the next one on the Short Vol Show Live. Thanks for watching. Bye-bye now.
You're watching Famous Dave.